Welcome everyone to the Kendall Report. It is Sunday night and plenty to talk about. We've got big inflation data coming out this week. Friday's action was interesting to say the least. I mentioned that the 37.11 level was going to be key for any kind of market support, and that just was taken out instantly. With the employment numbers coming out like they did. Let's talk about that just for a minute. But before I do, make sure you hit the like button and subscribe. And so what we see out of that report? 261,000 new jobs, or 63 it looks like. And then we saw the employment drop down to 3.5. So just the whole conundrum that's been going on for a while is employment's good. There's soft spots like real estate in the markets, but they don't seem to want to go down. Can't seem to find anyone that doesn't have a job. I had an interesting, I'll share a story here. I live up in the mountains in Arizona. I had to go to Phoenix this weekend. And what I saw down there was nothing short of crazy. Every business, every parking lot on a Sunday were stuffed to the max. It was just unbelievable. It was almost like there was a panic. Everybody was out. Now, grant you, it was under 100 in Phoenix this weekend. It was all the way down to 92, so that'll bring people out. But the point is that everywhere I went, every business was just stacked up to the max. And I don't know, it was very revealing. I had some errands to run down there, and that what I was seeing was just still mind-boggling to me. So it's interesting to say the least. I actually saw a traffic jam that was probably the better part of 30 miles long going up into the mountains out of Phoenix. Everybody on the other side of the road. I was glad I was going down, not up at that point in time. So everybody going up for day trips, all their toys and all their things that they have here in Arizona and the quads, and everybody went to play. I just think it's very interesting, and it's hard to come up with the whole recession scenario when you see what's going on, and jobs and everything is pretty phenomenal. A lot of things I look at when I'm going through all the markets and everything is exactly what's going on. I got an opportunity to talk to a few retailers, and the comments were pretty amazing. How business is, it's good. And so we have some things coming out this week, like retail. Let's go through some of the stuff that's going on here. We've got the big ones this week is going to be on Wednesday. Matter of fact, I should mention that Monday is Columbus Day, so some of the big banks are not open. The Fed's closed. There's a whole lot of stuff, so it'll be an interesting kind of non-bank day. There's some banks open, but the big boys are not, and the Fed isn't, and so there's going to be no activity in some of the. There's not going to be really a treasury market. There's going to be some things that are going to be pretty lack in trying to get guidance out of the market. Maybe that sets up a little bit of a hesitation. In spite of Friday's action, the markets closed up last week. S&P up 1.5%, NASDAQ up 0.7%, and Russell up 2.2%. So, you get influenced by a one-day sell-off, and they're continuing to go on. And I saw some wisecracker, Michael, somebody, he's talking about, all Bob's indicators were saying things are going to go up. Actually, they were up. They were up 1.5% to be exact. And I'll go through all the details. What I report here on this channel is what I see and what our database is doing. And we're just in serious downtrend right now. Okay, there's no reason to own just about anything. And I'll show you the database in a moment. And when you go through now, once again, I did this XLE ETF hack. That thing rallied 7% last week. So anybody that's following that's a Wavetech player or a PortfolioXpert, you know what's going on with these oil stocks. Once again, are coming back into play thanks to our friends in OPEC Plus. And that's an interesting scenario there. But let's take a look at that employment report just a little deeper. There were two areas where all the jobs were created: hospitality and also healthcare. And I can't tell you how many people I know at the moment, probably because of the strength in the dollar, that are going to Europe in spite of no natural gas over there. I'm sorry, folks. I know you're not freezing yet. I don't think you will. I think there's a little bit of another control issue going on there. But the bottom line is everybody's out doing something. Pretty amazing, I think, this world right now. And as much as negativity and things that are flowing, that's just some realities. And I know, like I said, I probably know 4 or 5 people just randomly that are going on trips overseas, and I guess the strong dollar does that. So Americans are out spreading the wealth, and so let's talk a little bit about this week, because I think this is an interesting scenario, and I know everybody is still very negative. Just a quick comment: the algos were big time all over this market on Friday. It was a classic day. The order book dried up. All the orders were flowing, and very aggressive sellers out there pushing the market down. There was a little bit of a recovery on Friday. Nobody wanted to go home with a lot of them. So that was the close in that last 30 minutes or so was fairly interesting. But let's talk a little bit more about some of these numbers coming out. We've got the retailers coming out on looking at a 0.3 on, I think that's not all the way until Friday. Consumer sentiment comes out on Friday, but the big numbers are PPI expected to be up 0.3. That's coming out on Wednesday. There's nothing coming out at all on Monday because of the Columbus Day holiday. And then we have on PPI coming out year over year. It's expected to be at 8.4. Last time the prior was 8.7. CPI on the next day, it will be out on Thursday, and that's going to be looking at the 0.2 on CPI with year over year at 8.1. The prior was 8.3. Pretty typical numbers coming out of the claims and continuing claims. Those numbers still hanging around low 200s on the claims, and the continuing claims have been about 1.3 in that range, a million. So that looks like that's likely to stay just kind of stable in those ranges. But all of the jobs, like I said, what's interesting is hospitality and healthcare is where all the jobs came out of this last report. And it makes sense. Everybody's traveling, everybody doing something. All you have to do is go visit some airports around, and you'll see lots of activity. So it's a good thing, right? So nothing, I'm glad that everything's working like it is. I'm not one of these that want to be, that I'm bearish on the markets and I want to see the market collapse so I can make money. The opposite would be the case. OPEC threw a real big curveball to the Biden administration, basically flipped them off and said, hey, it's so much for your knuckle bump. We're just going to cut production. And you can see Democrats are very, very upset. And it's interesting. The same divide that we have politically here. Democrats want no fossil fuels, but they want OPEC to keep pumping it. It's just crazy, right? And the Republicans are going, hey, just let us drill our oil here. We can fix this. So it's very interesting what's going on. We'll see who wins the debate. And it looks like, we're going into this lame duck situation here, see what they can cram through before the election. So it all going to be some interesting rhetoric around the markets. But in the end, as bad as people want this market to go down, and the market's definitely in a downtrend. You'll see when I go through here, the weekly trends are massively down. There's nothing good about these markets right now. But it's interesting on a short-term basis, still seeing, some type of sideways kind of a range-bound situation, whether we print down to 35.50 again and just stay 30, 35 and a half, 38 and a half, maybe 39. It's a nothing market on a short-term basis. On a weekly, you'll see here in a minute, it's pretty drastically down. I'm just looking at my notes here, make sure I covered everything I need to cover. I think there was a lot of talk about all of a sudden a Fed pivot again because of those weak ISM manufacturing numbers. That didn't last, especially when it came out to the employment numbers. This is one of the things I wanted to tell you. We did figure out something about the news. We figured out that good news is bad news and bad news is good news. So that's where we are. Sometimes we get in, I talk about this a lot, sometimes we get where all news is the market's just bullish, they don't care about news at all, or it's bearish and they don't care about news at all. So it's even going to go down, even if it's not it's in the opposite direction of what the trends are. They just don't care. Right now, they care. Looks like good news is bad news and bad news is good news. So if the report would have come in at 150 or 125,000 and employment would have upticked, we probably wouldn't have seen the big sell-off. But they were able to play this out pretty substantially. And it's something that I'll just go off on just for another minute here, is when you get days like where we see like days like Friday where they're just relentlessly wave after wave of selling. And we had we started last week off with a 6% rally. We saw this huge rally. And so there was something that was very positive. And then we got the good news, which ran the markets back down. So we're just going to be, I think what we're seeing is these these big, I call them stampede markets. And they're just wave after wave of buyers or sellers coming in. And it only takes about a slight bias to the, I won't do it tonight. I've talked about it before on some live streams. I would like to clip these things out or make these clips for maybe a YouTube shorts or something, but how price discovery actually works. Most of you don't know that. I know that sounds kind of rude, but you don't know. You don't know what you don't know. And what we're seeing, it takes about 30 or 40% bias. It's never about the volume. So don't be tricked that volume is what drives markets. Volume doesn't drive markets. What drives markets is the aggressiveness of one side or the other, the willingness to, on a day where the market goes up, that the market's up 3% and there's still buyers coming in relentlessly. They don't care about the price. They just want to buy, and they're very aggressive. There's a seller on every side of a buy. So just know that it's just the aggressiveness. I'll do that. I need to do just a video on that, and that would be good because I think a lot of folks don't understand why prices get bid up or sold up. They think it's just because there's a lot of volume. It's not that at all. You can have a lot of volume and prices virtually go nowhere. So anyway, I digress, go forward. Let's go ahead and take a look at the database, get through tonight's video, and we can talk about what comes up at the end of the video tonight. All right, let's go ahead and get into the database. So as we look at the database, I have the short term up right now. I'll flip back to it in a minute, but let's go over that. We had 384 buys, 499 sells, so we had a slight bias to the downside. We were at around 19% plus. Don't have the number right in front of me now at 1857, so the bullish percent dropped down just a touch. Nothing material, but it's at 18%. That's not bullish. We need to get above a 42+% to get any kind of bullish rotation. Nothing like that is going on at all. And there's just really nothing to point to whatsoever. Let me flip this over to the weekly. And weekly's at 24% bullish, and we had 168 new buys, 181 sells, so it downticked just a little bit. It was 25, I think exactly 25%. Now it's exactly 24%. So that means that only one, you're looking at 24 out of 100 symbols are bullish, and there's just nothing out there. And other than like that hack that I was talking about earlier, let me just bring that up real quick for you so you can see this. This is the XLE hack, up 28 point. Let me see. Let me get the right thing up here. Yeah, up 24.57. It was up just 1.5% on Friday. But you can see this green line is the hack. So been flat here. We actually built this in the live room in January, and we're starting to see some bidding up. It was back down to 17.5%. We're back at 25, so it rebounded pretty good. You can see the bottom blue is actually the S&P, so they're almost divergent completely. It's been the only strategy this year that I've seen really work very solidly, and it's been, when you see it go flat, we actually went to 85% cash for a while. We brought in some symbols, and now we're back at around 85 or 90% invested right now. Let me take a look at it since I have it here on the screen. We'll take a look at this. Right now it is actually 96% invested and only 4% in cash. So it's got quite a few of the positions here. You won't be able to read these; they'll be too small for you. But these are all the position. There's only one position on the daily. Valero is the only one that's negative. So they're all positive. Everything from Apache to Conoco, you name it, Baker Hughes, all this stuff that's in here is just really positive. And my point of actually showing this to you is that this is actually the only thing that's working out there, and it's the only thing I've seen work this year consistently, and at least it's trying to get some more traction. We'll cover crude oil here in just a minute, but let's go ahead and get into the technicals tonight. Okay, here we are. Let me get in over here to, this is the 1 hour hourly chart here on E-minis. They're right on resistance right now. Our predictive indicators are suggesting that we're probably going to trade up, and I'll show you on the dailies where the ranges are coming in, but we're looking at probably an R1, possibility of an R2. So far, we've already printed down to some key numbers, but it looks like several hours from now, at least, we should stabilize. We'll stay underneath this 36.86, this hourly moving average. So it's coming down quite quickly. So that resistance is going to end up probably around 36.60 or 45, something like that. Let's take a look at the daily, and I think this is interesting as far as the trade goes. There's still some upward projections here on the fib target. We did have those STX buy signals come in down into this lower pattern, so we're retesting The key level here, 35.67, is the pivot underneath the market here. Let me just get an exact number for you. 35.61 is that pivot down here, and so far we're holding above that level, and we've seen a little bit of a bid come into the markets here shortly, but it does appear still, as I talked to you about several days ago, the PPM2 was projecting lower. It did that. It did decline. We rejected right around the 21 period moving average, and that was what was supposed to hold. What thought was going to happen was that we would hold around the 10 period moving average. We went through that, just that stampede that I talked about a little bit ago. We just traded right through those levels, so we were unable to hold that level. And I mentioned that this 37.10, 37.11 would be critical for the markets, and it was non-existent. It didn't even matter. It just went straight through there. And you can see now what's happening is PPM 2 is actually projecting one more day of basically flat, and then it's looking at the potential for the 21 period moving average to flatten off. So let's go over to TradeStation, get some of the key numbers here from the standpoint of what the market grid is telling us here. This is the daily E-minis. We've had a low so far of 36.18. S2 is 36.04. So we've been in between S2 and S1 so far. R1 is 37.76, and that would put us up around that hourly moving average that I just discussed. So not a lot of upside here. I don't expect to see much out of this market. No stampedes, no reason to do anything. Everything's basically closed up. So be a semi-holiday type market environment, I think, here. The key levels to watch tomorrow will be 36.04. If it takes that out, all of a sudden then we're down to 37.58, 35.55, which puts us down into that pivot number I just showed you on the daily. So we're definitely looking at the potential there. Let's go over to the weekly, because I think there's some interesting things to look at there. On a weekly, we're trading right at the 200-week moving average, and this is going to be key. The last couple of weeks, we look at this. The 200 is 35.57. We had a low of 35.95. The next week, we had a low of 35.71, and the average on the 200 week was 35.63, so another test. Now this week we're 35.68, and so that's going to be your really big pivot number. Anything below that, the next thing you know, we've got these fib targets down here: 33.50, 29.70, 27.75. You just look at the pure values of the weekly PPMs: minus 1.32, PPM2 minus 0.33, and PPM3 minus 0.62. These are all downtrend levels. No reason to own anything other than trading short term. Other than that, everything should be neutral or out, and be very cautious with a lot of this stuff. You know, we saw Apple, Tesla, we saw a lot of stocks get crushed over the last on Friday especially. But the bottom line is you've got major resistance. 39.14 is the 10 period moving average. That is a ceiling on this market. Pretty much no matter what would happen, we're not getting above that. And that number is dropping about 50 handles per week. So that's going to be mid 38s next week. And as we go through this month of October, by the time we get into mid-month, we're going to have a major, we'll say, cap on the market, maybe at 38.5. So the real question is, are we going to be able to hold this 200? The 200, interesting enough, PPM, the Wavetech 200 is at plus 0.15. That's actually a reasonable number to hold. That's enough of an uptrend that it should continue to hold. And so just look at that number there. And we look at the market grid for this week, you'll see some interesting numbers as well, because I was just talking about the moving average of the 200 week at 35.68. You'll see 35.39 is R2, I said R2, S2. S1 is 35.99, so that's probably your downside target. We could still test that number. Like I said, everything's in downtrend. There's really not much there other than maybe a little short-term bounce, but there's plenty of overhead resistance to hold any kind of bounce back. And we saw that last week just trading up to the 21-period moving average. So certainly don't try to classify me as bullish. What I am saying is that we do have this support line here, which needs to be watched. And since I'm sitting here with virtually no positions other than the crude oil, that's about it. So we do have like some of those XLEs. Like I said, we do have that, but a lot of those are on short-term daily triggers of the percentage. Those are part of what's currently long of that 18%. Those are in that 18% as far as the oil stocks that have triggered back in long. But those things have a hair trigger on them. They could last 3 more days and they could last 3 more weeks. So they're quick to pull the trigger and move the cash again. But it looks like I didn't go through some of the individual symbols, but when I did a couple of days last week, and it looks like there's still a bit of an upward bias. And I'll cover crude oil here in just a minute, but this is pretty much breaks down everything going on in the S&P right now. So support 35.5, 35.50, those numbers I mentioned. Sitting here, 35.68 is the 200 week. That's your major support. Break below that, you actually have fib targets down below here, 33.50, 29.70, 27.35, and I don't know what would trigger those numbers, but I would certainly think if we get through this 35 handle, this is going to be a real issue, and we're going to see some acceleration out of this. And just to preface this all, until we get those closes, till we penetrate through some of these numbers, then this support level is going to hold. And if we just look at the market grid for this week, the expectations, you can see it's very broad. It's as high as 38.80 in RXT. STX is 34.26. So those of you that have the indicators, make sure you watch these weekly numbers. They tend to be very accurate for the week, and the day-to-day numbers have a little bit more noise in them, but the weekly numbers are pretty stable. In fact, if we kind of look at the last couple of weeks, we almost did last week. We almost did in RTX. We got up to 38.20. RTX was 38.53. On the downside, we had a low of 35.71, and you can see S1 was 35.42. So we didn't quite make an S1, but like I said, market closed higher in spite of all the volatility, and in spite how let's just say after Monday and Tuesday, how the rest of the week felt, and especially on Friday, markets are illustrating a little more strength. Everything is down, so no doubt. On daily, weekly, all of these trends are down. As usual, I'm going to go through one more step, but I'm going to use the S&P as a proxy for generally speaking about the NASDAQ and the Russell. The Russell actually looks a little better, but here's the monthly chart here, and we've got big downtrends, minus 2.69, minus 0.05, and the only thing that is up right now is the 40-month moving average, somewhat a similar value, a little bit lower than what we have. That average is 36.99, so we're a little bit below that, where the 200-week moving average, as I just told you, is like 35.68. So that's probably your your range. We're probably going to hold in between here. And then if we look at the market grid so far for October, high 38.20. We talked about that. R2 was 38.30. So we basically printed R2 on that crazy rally we had early last week. S1 is 34.93. So that's suggesting that we could print down this month into the below this 200 and actually cause some serious damage. So the weekly trends are still accelerating, still major league down. And so don't have any expectations. And I would say that if we just look back on last month to get a feel for how these numbers work, I think that's important as well. We had a high of 41.75. R2, we came a little shy, 41.97. The low was 35.95, and we had an STX 35.24. So we didn't quite get to STX. We traded between the S3, STX. Those are extreme values. So that was for September. So that we come into October here, these are the numbers to watch. And I'd watch very closely because you can see that if we get through 34.93, the next levels down are those fib targets I just talked about, 33.72 and lower, all the way down to 31.43 on a monthly basis. So with these kind of PPM readings, these are really big. And you'll see, I'll touch on some of these values that make sense when we go through the NASDAQ, which we'll go into right now. So in the NASDAQ, I'm going to go top down, meaning I'm going to start with monthly and quickly get down to the shorter term. NASDAQ is just way weaker. This is where this has been the market that has led all the way down. Forget the 40-week, I'll get this right, 40-month moving average, 11,976. We're way below that, 11,057. We look at the grid for this month, S1, 10,635. So we've almost been down there. We traded 10,890. So there's still some downside. We look at the upside. We had 11,729. So we came just short of R2. It's pretty much the theme through all of this. Let's go to weekly. Here's where we get that 200-week moving average. We traded now 3 weeks below that. That number right now is, you'll see on this pop-up screen down below the STX, it says average 11,262. That's the 200-week. So we were able to close under it for the last 3 weeks. Last week we haven't closed this week. That number is 11,284. We closed 11,101. So right now we're trading negative right now, 0.40 on the session, but that 200-week moving average is 11,305. So that's really going to be a resistance level, and it doesn't represent any support. So only the S&P I shouldn't say only, the S&P is above the 200-week moving average where the NASDAQ is below it. And so this continues to be somewhat of the leader down. But let's take a look at the PPMs here. And what we're seeing is PPM2 is still negative, but it's turning up through its first, second derivative. PPM1 is big time minus 1.82. And that's going to be the big number to watch. The 10-period moving average is dropping like 200 handles per week. So it's very quickly going to be down into not, mid 11,000s, and there'll be lots of overhead resistance. So these markets, whatever they do on the upside, are going to be extremely limited. And the real question is, do they just set up some kind of bottoming, not bottoming, but a consolidation range down here at these levels? All right, we'll get to daily here, and we'll look at what expectations look like for today. So far, 10,986 low. We're looking at S2, 10,919. That should probably be the low. R1, 11,187. We're a little short of that. We've almost already traded R1, S2. So we've got a little bit of range expansion that can happen here. And but look at the PPMs here. PPM1 minus 0.23. PPM2 minus 0.66 and declining, basically crashing. So you're seeing an acceleration of the trend over here. I'm just going to open this up a little bit so it's easier to see. You can see we've already traded through fib target 1. Next fib targets on the NASDAQ are 10,474. And then fib target 3 is 10,000. Is rounding off. That's way down here. And the last low that we have is 10,890. So we're trying to set up a retest of this low. So we get through that. We're probably ultimately heading toward this 10,005. I'll just round that off a little bit. So still a lot of ugliness here on the daily projections and this downtrend. You can see. I'm just going to draw something in real quick just to tie everything together. This is the case on the daily S&P as well, as all of these averages are now. PPM1 is actually flattening out. It's coming in right here, but we've got big downtrends on all three of these averages. There's some upward fib targets. I don't think they're going to see the light of day. And in fact, they stopped calculating, which means they've been negated. So there's nothing even there from that standpoint. So we're just looking at all of these trends. This is kind of the angle of attack and most likely heading toward, some of these fib targets. And unless we can trade above, let me get rid of some of this junk here. Unless we can trade above these highs in this pattern, then these patterns are going to stay live, suggesting all the way down to 10,000 on the NASDAQ. Like I said, the Russell has a bit of a different pattern here that continues to unfold. We did get on, this is the cash, so we did get an STX buy signal on Friday, which suggests that we should be maybe sideways. Let me put the RTY. We're down 0.46, so we're just kind of drifting right along this 10-period moving average here, which is down. Actually, this is kind of interesting here. This is how much different the pattern is on the Russell. The Russell 10 is actually a positive value, and PPM1 almost trend mode up. So we're trading at that number's at 1716. We've had a low of 68. We're trading just above that. So if it trades and finishes below that tomorrow, we might see this start to turn down as well. And I could go into the PPMs and see what the forecast is for that. But for right now, it looks like the dominant is going to be this PPM2, which is minus 0.52. And just like with all these trends are negative and pointing down. And the probabilities right now of getting some kind of right shoulder on here and maybe setting up the old classic cup and handle, that's certainly there just from that standpoint, but there's really not the kind of metrics you typically are going to get that kind of setup. Let me go ahead. I just want to put just want to see what the projections are going on here as far as the forecast goes. It's interesting. We had 7 RTX buy signals in this last sequence. And this is, we have some in this trend, as it looks like from the forecast, this is daily. the forecast is suggesting that ppm 2 and 3 are going to stay quite negative. They're not going to get, they're going to stay in trend mode down. And then we have these fib targets on the downside right now, which are suggesting all the way down on the Russell to 1506, 1400, 1335. And I think that's interesting. We got a decent bounce off of this low over here, but there's just these trends are just so strong. And even ppm 1 is forecasting to supply a little bit of support for a few days, but ultimately it's going to surmise to these trends on the downside on the 21 and the 40 period moving averages. Okay, next we'll cover the 10-year. 10-year got into this upward slope. This is the daily. We're seeing, well, a positive move here. My thoughts on this is that we could be, I'm going to just move this around just a little bit. We could be setting up a potential right shoulder top here. And is everything, we had these fib targets down here. We still had these angle of attack here. Let me draw in a couple things, and then I'll go over to the intermediate so we can take a look at that. But what we're looking at here is a couple things. This, you see this, I'm going to just use this color, but this, we've got the angle of attack here going up. These are all up. Even the 10, I'll use the same color to project the 10. Everything's still up, so we should stay above that, those levels here. I'll get the cursor to the right point so we can get the values. But these are trends that are likely to continue. And then what we're seeing over here on the PPMs are interesting as well. We're seeing them trying to turn up here on all of these averages. They're trying to flip up. So that tells us that this uptrend will continue to go, and that possibly will be the thing that just ultimately drives the market down big time, the equity markets, just because these rates look like they still want to go up. The scenario I was going to set up here is what we could get is where we get this little retracement, and then we come back in like this and set up some kind of triangle formation here along these averages somewhere. We do have those fib targets. I don't think they're significant right now, but I've got to take this off here. So let me clean this up and then move the cursor so the values that are on the screen are the right values. So this was as of Friday's action. So R3 was 390. We actually printed 391. RXT for just on a daily chart was actually the where's it at? 392. So we basically printed right up to the extremes. If we go over to the weekly, we traded above last week. We traded above the RTX, which was 392. We printed up to 399. Actually, an overnight action, which isn't printed here. We actually got over 4%. We pulled all the way back in early in last week down to 356, and then rallied 40 basis points all the way into the close where we finished at 388.30 and had the 91 high. But we look at the market grid, we're looking at R2 was 394, so we didn't quite get there. We look at this week, we still have that upslope. So what we're looking at on a weekly basis is somewhere S1 380, 372 is probably going to be the lower end. And all of a sudden, R1's 395 and then R2's 404. And this maybe has a lot to do with the inflation news that are coming out. Maybe I can't imagine things are going to be cooling that much, and that we're not going to see that these inflation numbers are going to stay extremely elevated. I don't see what the Fed's doing right now changing any of that. And just like I said, my experience of going down to Phoenix on a Sunday, and I got through a number of very active areas and places where malls and that kind of stuff were. And there, like I said, everybody's out. So the economy just feels like super overheated and like it's not about to stop. Everybody's in this frantic mode right now. And it seems to feel everywhere in travel and everything else. I mean, so, in September, I went overseas, and it was the airports, all the international airports were just crazy. It was really, really busy. And so anyway, like I said, this is really the conundrum here that we're dealing with is, there's certainly signs that there's problems in the real estate area, but this is it right here, right? You've got the huge numbers. You're looking at, 6.5 plus on mortgages. You're not going to see a lot of expansion and a lot of things going on there from the standpoint. The only place, and I've told you folks this before, the best place if you wanted to get a discount right now is brand new homes. Some of these major dealers. I went through a number of websites a number of weeks ago, probably 3 weeks ago, and there were a lot of anywhere from 15 to 25% discounts off of brand new homes. So if you bought a new home from these guys 3 months ago, you're screwed. You're already down 15, 25% on some of these houses and these models in some of these neighborhoods. It's pretty interesting, especially in some of the hot areas that out there. Austin, Texas is getting hammered right now. They were through the roof crazy, and now they're really seeing a big rollover. And I know San Antonio, another big city that was hot, has seen a lot of at least prices starting to slow down, a little longer time on markets, but Austin's been hammered big time. So, and there's other areas. Dallas is underwater, some of the Texas market, but there's plenty of stuff. Phoenix is probably the worst of everything when it comes to housing. So housing is definitely it. And this chart here is what it's all about, right? We're just seeing these yields climb. And you look at this this weekly chart that I've got on the screen here, and really what you're seeing is the crush of the housing market, right? And everything else it ultimately will affect, and we'll just see exactly what kind of numbers we get out of the CPI and the PPI this week, and see if we finally get some kind of short-term top. But just like I showed you here a minute ago, if we just go to the projections for this week, we're looking at R2 404, R3 412, 420 on RXD. So we could see some crazy stuff out of these numbers this week. We print anything that looks like that, I can almost guarantee you that they will crush the equity markets along with everything. So this is what the Fed wants. And just since we're talking about with the interest rates, this is exactly what's going on here with the Fed. All the talking heads, the Fed presidents running around doing media, they're all saying the same thing. Basically, what they're really saying is we're not going to stop raising rates until we break something. And they're trying to break something. And I think what they're trying to break is employment, but there's just no signs of it. So maybe, things look as crazy, and the frenzy that I saw being in Phoenix yesterday actually was maybe that's what the peak looks like, right? That I always say the definition of a high or low of the market. On a high, it's the best the market can look on any given day is the high. Everything's perfect, and the low is it's as bad as it's ever going to get on that low. That day, you can't find a worse day, and it feels like it's going to go forever, but indeed, it's actually the turning point. So that's the same scenario here, but it looks like to me that we're at 388. We could see as high as 4.25. Is that the inflation numbers? Very possible. We get those kind of numbers, we got a big time crush job. So just everything. Like I said before, the only things that are in uptrends is the Dow and the 10 years. So I'll probably cover the Dow here in a minute. I think it's relative to what's going on here because there's still a lot of strong uptrends there as well. So let's go ahead and move on, and let's go ahead to the Dow here. So here we are at the Dow. We got a big reversal last week right off the 10-week moving average. 10-week moving average 109.53, the low 10.06. You look at the market grid. This is last week's prices on the screen here. Those are at 110.51 was S2, so we printed just below that. S3 109.66 on the upside. We printed 12.88 as a high, 112.88. Look at R1, 112.88, smack on the R1. So the dip down to the 10-period moving average, 109.53, came a little short. I said 10.06 is it. And we still have, let me bring in these numbers here. And we still have fib targets on the upside for the Dow, 115.68. And we're 115.68, 117.57. Let's just go out to a monthly and see if there's any crazier stuff out there. Yeah, so this is interesting. The monthly, and I talked about this several weeks ago back in 5/31 in May of 21. We got these fib projections out there, 103.95, 109, 113. Well, here we move forward to those numbers were hit here in 8/31 of this year. And now we even saw the market grid get extended here where the high was 114.78, RXT was 113.23. And then here we are into the month of October, and we're looking at the potential 114.88, R3 116.33, which comes right into that weekly. This is monthly chart we're looking at. It comes right into that weekly number there, and that is really huge. And let's face it, it's not just the interest rates that are tightening. This is tightening the world economies as well. And I guess if you wanted to say there's a recession, it's clear it's probably in Europe. But you're looking at these numbers here. This is just going to drive things, make things even worse as far as emerging markets and other elements out there are not going to be good if this Dow is going to continue. And I'm looking at these PPMs here on a monthly. They are massive uptrends, and the upward angle of attack is telling us that there's another probably multiple quarters where the Dow is going to remain strong. It's not going to just reverse out of nowhere. I don't know what would cause that, because right now the just tying together the interest rates and the Dow here is what we're really seeing here is the bond vigilantes are laying low right now. They're looking for, and I've said this for years now, is that we're just one bad bond auction from disaster. So if we're going to print something crazy like a 4.25 plus in this coming week with all this inflation numbers, that the bond vigilantes are going to be around in droves. And I haven't talked about, I'm not going to do it tonight, but the U.S. debt clock, we're well over 31 trillion. And that's just the tip of the iceberg if you go into all the non-funded liabilities and everything else that's out there. They're just numbers. And let's face it, we all know this, and we've known this for going back, maybe even beyond, going back to the early 2005 to 08 when we got into, the GFC mode, is that this debt is never, ever, ever going to be paid off. There's no way to pay it off. They could take all of the GDP from everybody and everything and put it in there, and they couldn't even use MMT. They would just blow up everything. So we're finally maybe at that point of capitulation where the wheels come off big time. Whether they can sustain it for a while yet, everybody was pointing to Japan for years, like, okay, no problem. These guys are going to be able to, they're just, QE forever. And they're still doing it, by the way, so they really haven't backed off. But I think what we're seeing at the end of all this, just talking dollar interest rates, what we're seeing is that point where things are at the completely capitulation point, and that's where it goes. And that's why the conundrum's so big. So I'm going to tie together some of the things I talked about earlier, as the conundrum's so big because of all of these labor factors. Somehow we've got this overheating economy, and labor just continue to be strong. And then we've got all this interest rates and the inflation and everything's going on. Is this a result? I've asked myself this, and maybe you guys can comment in there. I love your comments. Is this basically a result of turning the switch off of the economy and shutting it down and then flipping it back on? Is it really supply chain constraints? Is that what the issue is? Or these are questions I'm asking myself. Or is it that by turning everything off, everybody got so scared that you can't even, they're just freaked out. They're afraid that things are going to get turned off and everybody's in a frenzy. And that's almost what it feels like to me. And that probably isn't a good thing. I'm just, but anyway, comment in the comments. I'd like to hear what you folks have to say about that. But the reality of everything is that we are at some crazy point in time that nobody, me, 43 years in the markets, nobody, Ray Dalio, nobody knows has ever experienced what we're in right now ever before. I've said this before. It's above all of our pay grades. I don't give a shit who you are. There's no way to come up with, you can only, I rely on the technicals and the quantitative with the software and stuff, and it's led me through some crazy times, and some things that I said and didn't seem like the right things, and they ended up on balance to be the right things to do. And right now, we're every bit of 60 to 100% in cash. So we have a lot of cash, and even Ray Daley finally capitulated and said cash is not trash. So, I've argued for years that cash is a position, and especially in markets like we've been in. For the bulk of this year, outside of the XLE hack that I did, we have been in 60+% cash all year for our money management customers. Everybody's been in a lot of cash. There was a point in time where we seen some things click in, and then they just rolled over, and now we're back into a broken mode. So I know I've been on several rants tonight. Sorry to go so long, but a lot of things come up. I spent, like I said, I just got triggered by going out in the world. I live in a bubble up here in the mountains. You don't see a lot of things. It's a small community. Like the total population in this area is like 120,000. Nobody lives up here. And you go down to the valley and you go to 4 and 5 million people, and you see what activity is going on down there. And it's and I lived down there for many, many years. I've been in Arizona for the better part of 30 years. So, but the point is that this is like there's something going on. Is it going to break? Maybe. Are people in a panic? Maybe. I don't know. Maybe it would be nice to hear from what you folks are feeling and being out there, because we all live in this same world. We all are watching the same movie. So that, anyway, sorry to get on this rant, but I think these are important things that we have to ask ourselves. And I'm not concerned about investments whatsoever because we're protected. I told you before, my entire world turns around the software, the portfolio management software. I don't have any concerns there whatsoever, what we're doing with clients or any of that, because we've protected them. And that's what's important as far as trading and slopping around here and trying to figure out some of these crazy things that I talk about on the channel every night. That's where it's really getting to the point where the markets are starting to get at extremes at a lot of places. And I have to go on for a minute. You see a lot of folks showing you charts, especially I know some people I follow on Twitter, some things like that. I see these charts and they're always talking about it's never been this bad before. Well, what did I just tell you? What does a low look like? Well, the low looks like the worst it's ever been, and it just looks like it's going to go on forever. So we have a lot of metrics looking like it's just going to get worse and worse, and it may. I'm not predicting a low, but I'm telling you we're at one of those potential capitulation points. And I look at the landscape. We got election coming up here. I look at the people running this planet right now. You can't get too excited about that. And there's just, you can go down the list. There's all kinds of shifts going on politically in different countries and different places in the world. And then we've got a geopolitical situation with Ukraine and people trying to push us into World War III. All of this stuff is going on. So it's just like, I made a comment one day, I think on my date. I did a live stream on a Wednesday. I said, or maybe it was even here, I was in rare mode, but I was like, what the hell are we all worried about what these markets are going to do if that kind of stuff is potential, So it's a really crazy world. It just feels like everything is stretched to the limit. So I'm really going off on this, hoping that you folks, I'd love to hear what you guys have to say. So anyway, go for it. Comment, especially it's a lot easier. They're stickier on the replay when I get that. If I get done tonight, right? So I'm stuck here on the dollar. So let's go. We've got crude oil, gold, and Bitcoin. So I'll polish this off pretty quick. But thanks for listening, because I think there's just a lot of questions. And as I went through the stream tonight, these are they're somewhat scripted. I have this little pad that I work off of, but in the reality is this is everything I do, all my analysis and everything I do is live. I don't premeditate anything. There's certain things that I review, but I just, so this just kind of came up tonight. So I'm anxious. I can't look at your comments right now. It'll throw me off in my thoughts, but I'll just go ahead. We'll go ahead and hit crude oil, gold, and Bitcoin, and then I'll come back up at the end and maybe I'll get a chance to look at a couple of comments and comment on some things. All right, so here we are. This is a monthly crude chart, and we're in October. The extreme for October is right now we've been at a high of 93.55, RXT 95.33. So we're trading between R3 and RXT for the month of November. We look at November, the month of October, and it's interesting because those of you who've been in the live room and you've heard me mention this is somewhat of a potential dragon head setting up, which suggests that we're going to start to turn back up. We're trading just above the 200-month moving average. And if you look at the PPMs down below, everything is trying to accelerate again. And we have these angle of attack still positive across the board. Around, I mentioned the other day, 70, 71 is an absolute floor. You see that, you should buy all the crude oil. It's not quite as good as when it was negative $40, but it's one of the better points in time you're going to be able to see this stuff as a bargain here. Let's go over to a weekly chart. And you can see we're coming right into the 21 and 10-week moving averages and the 40. They're all kind of converging here right in on this 95, 92, 95, last trade 90, 91, 94. We're down a bit overnight, but this is the potential for the market start to roll up. We got PPM1 at a plus 0.44. PPM2 is down, so there's some resistance here at 95. So we could see another week where we trade between the 10, 87.41 to 95.10 is probably the range that I'll set up from that standpoint. And I think this ties together pretty well with the interest rate and the dollar and all that scenario with them being higher. So we're kind of coming up into this resistance. I talked about 92 last week being the resistance. So a little more fine-tuned this week, 90, 92.70, 92.10. So we've been 93. So we traded right between those levels. So watch how the market acts here. Look for some rejections, but the downside is absolutely limited to 87, 86 on the downside. So we're just going to be stuck in that angle of attack and that slope of this trend. All right, next we'll cover gold, and I talked about gold hitting. We got right up to the 1728 was the number I had out there. We traded 38. We traded above that. 1729 is the 10-period moving average, and it's down at 0.53. So big time downtrend going on here. Right now, on tonight it's 1719. We've been 07 high, low 97. We're looking at S1. This is weekly again. S1 is 94. S2 78. And if the dollar is going to continue, you can see all of a sudden the PPMs are starting to look a little interesting. They're all rolling over again. And so we're starting to see some downward pressure build again. And there's just no way, like I've been saying, that gold's going to get much over that 1728 level. That was pretty much the target. It did print, like I said, last week it printed 38.70. So it did print above that, but there's just all kinds of resistance and overhead tops between 28 and 1755. You've just got a ceiling here on this market, and about all you can hope for if you're a holder of gold is that we hold into this STX level, which is 1647. Probably right now we've almost printed S1, probably S2. Maybe we see an S2 R1 this week. We'll see how it sets up. All right, I'm still absolutely, I'm changing the scaling a little bit. I'm still amazed at how well Bitcoin acts here. It just appears as that monster support. We're seeing the PPM still trying to turn up a little bit. They're still suggesting support. I've talked about these numbers so much, it's getting boring. But you can see S1, 1874, that's your big number. 18,200, 18,555 have been, if I went through these lows here, have been prints that we bounced off of. We did trade up towards the 1020, 729. We got up to 2454. That was it. But PPM 2 right now is trying to, it's actually cut through its first second derivative. This chart will be updated when we come in tomorrow night, but this is there just seems to be something just keeping this market just stable in spite of crazy weakness. I mean, we didn't even see any real follow through on the sell-off on equities on Friday. So these guys, this market is living in its own world. Maybe that's where it belongs. But we're definitely seeing this goes on right now. Let me just put up a monthly graph so I don't. This has been going on now for 4 months, okay? And still lots of downside here on this thing, but the key resistance is right here at 2560. So that's just going to continue to be a major. I'm sorry, I said 2260. The absolute is 26,388 is where my crosshairs are on this chart right now. So let me go full screen. So I'm not sure that number means much. PPMs are still down. So there's a lot of resistance coming into this market on longer term. I just mainly wanted to see how many months that we've printed in this area. So here, let's go through these months. Let's look at the lows for each of these months. 18,635, 18,921, 19,523, 18,188. There's that 18,2. And so far, we've got 18,931 for this month. So just a comment on Bitcoin. Like I said, I think it's just incredible that it's held these lows. Don't really see, there's nothing on the PPMs, nothing here that you could point to some kind of rally of some sort, but it just magically, it's gravitating, defying gravity here, and that continues to be the case. Okay, folks, that's going to do it for tonight. Thanks for hanging out, and I really appreciate it. I know I went on several rants tonight that just kind of came up as we were going through stuff. So let me see what you folks are saying here. And to see if there's anything I can comment on here. Yeah, Belinda, that's interesting. I'm telling you, it was crazy, I thought, when I went down to the valley, and every store, not some stores, every store. And I'm really careful about global labeling things, but I couldn't find anywhere where it wasn't crazy. And I think I was down there midday, 1 o'clock yesterday. So it was pretty insane, I thought. Yeah, and John, you may be right. I'm just looking at John's comment. So when BTC breaks, it will go to, maybe it goes to zero. Maybe that's the final break. But for what it's holding there, everything is really pointing to lower prices on that as well. And, so anyway, folks, thanks again for being part of this channel. I do promote what I do because I believe in it. And these Wavetech indicators are really special, especially these new updates with this auto regression algo tool that we built in there. Intraday stuff is insane. Just know that if you do sign up, get the indicators, you can now get into the live room for 30 days. So make sure that you get in there. And we're in there tomorrow at 1 p.m. We'll see what kind of day we get. So far, I haven't looked at the markets for a while. We're down 1550 right now on the E-minis. NASDAQ's still pretty much where it was. Everything's pretty stable. Anyway, folks, have a good day trading tomorrow. I'll see you tomorrow night here at the same time. And those of you in the live room, I will see you at 1 p.m. Eastern time on Monday. Thanks a lot. Thank you for watching. Make sure you subscribe, hit that like button before you leave. Thank you. Bye now.